In this video I will show you my complete trading strategy. With this strategy I'm able to have a 50% win rate and catch multiple R positions a week. Without further ado, let's get into the charts. Okay guys, so as you can see right now we are on the charts, we are on euro dollar. This is a position that I took this morning, but let's come back to that in a second. So what we want to do in the first place is we want to determine structure. I made a video about this, you can look at the info card, how to determine structure. And basically, that is the number one thing that we do, right? We are determining structure. So in this case right here, if we go to the 4 hour and maybe even to the daily, like this. So as we can see, the daily, the weekly was fairly bearish. It was fairly bearish up to this point, of course. But if we go to the weekly, it will become even more clear. This is just a retracement, right? Or in my opinion, in my beliefs, this is just a retracement. This retracement lines perfectly up with this support and resistance zone, supply and demand zone right here. So basically, this is a zone where price comes to, reacts off, comes to, reacts off, comes to, reacts off, time and time again. So my predictions before the year even started is that we would come to the zone and react right off that. And basically, that's what happens right here. We came to that zone and we reacted right off that. Let me draw out that zone so that everyone knows what I'm talking about. This is something like this, right? So we came to the zone, reacted off it. We came to the zone once again. We took out the buy side liquidity. So basically we took out the previous highs to then trade lower again. So my prediction is, if you go to the 4 hour, it will become a bit more clear, or even to the daily. If you go to the daily, it will become more clear. So my prediction is that we are going down from here. So you can see we had quite a strong reaction coming down. But if I do want to sell, I only want to sell from this zone up here if I'm taking larger positions. So basically, up to that point, I'm buying. So that is basically how the narrative started and how my bullish analysis came to a place. Then on the 4 hour, if we are following structure and right from here, we can see that we created a low. So we created a low, high, higher low, higher high, higher low, higher high, higher low. And now we are forming a potential higher high, right? Or not even a potential, it will definitely be a higher high, but we don't know where it will land yet. So with this narrative in place, we are zooming in again to the 1 hour. So right now we came on the 1 hour, we broke these highs right here, and I saw that price retested the zone. So basically again, support and resistance zone. I know a lot of you guys don't believe in that, but it is clear as day, it is happening right in front of our eyes. We can't ignore this, okay? So that is a strong zone where price reacts off. And if we see that reaction happening again, this is where we act. So basically we see a reaction coming out of the zone and I was like, okay, let me investigate this even more and let me see what is going on right here. Are we going to continue along? Is my narrative in the right place and is my analysis any good? This video is brought to you by Henko Trade. Henko Trade is a broker that offers very low spreads on indices, commodities, forex and even crypto. I mean, look at those spreads, for example, on forex pairs. It is insane. And yes, these are live spreads. They're also offering a 100% bonus at the moment. So basically for every penny that you deposit, they are doubling it. So for example, if you're depositing $500, they're matching it with also $500. So you have $1,000 in total. So if you're looking for a broker with low spreads on indices, crypto, forex and commodities, I would say check out Henko Trade. So then we go to the 15 minutes. And as you can see, in the morning, this morning, it was right before Frankfurt opened, we sweat the sell side liquidity. So basically this was the most obvious point in the market where sell side liquidity was laying down. We took that out and we had an immediate reaction after that. And by the way guys, now I'm just breaking down the trade and I'll break down one more trade after this. And then I will give you step by step what you need to do to trade my strategy. So then as you can see, we came with a lot of displacement coming out of here. So I went down even further to the 5 minutes, and on the 5 minutes, I saw this happening. So basically on the 5 minutes, we had a market structure shift happening right here. Basically, we broke this previous high. And a market structure shift, guys, is whenever you are going from lower highs and lower lows to higher highs and higher lows. As you can see in this example right here, we broke this previous high that created the lower low. And this is also the low that swapped the sell side liquidity. So basically this low made sure that we created a market structure shift right here by breaking this high. And even with this and this high broken again, this is a very clear confirmed market structure shift. But I was already in the trade from here. So basically I saw, okay, this high gets broken. We have a lot of momentum to the upside. We have a fair value gap right here. This is my entry. On the top of the fair value gap, my stops are underneath these lows right here. I was like, I just had this feeling that we had so much momentum behind it that we would never come back to these lower ends right here, just because we took out the sell side liquidity so heavily and we had so much momentum behind it. Normally I would advise you to put your stops underneath here or to have your entry a lot lower, but as you can see there was only a fair value gap right here, there was a fair value gap right here, so these two could have been an entry. So yeah, we could argue that this might have been a risky or more aggressive entry, but nonetheless my analysis was on point here. So stop loss underneath here, and then basically I determined my take profit on the buy side liquidity that was right up here. So we always have to think about it like this. If you are taking out this point, this becomes the new low of course, and we are still in a bullish structure. What is the next point in the market that we are most likely to take out? That is your previous high, because this previous high is very weak. It did not break the previous swing low. So this previous swing high is the next point of liquidity that we need to take out. And as you can see, we did that with a lot of momentum today. Also because of news, of course. Nonetheless, this trade was good for a 1/7. Then we had also another trade on Euro GBP. This was a trade that I was analyzing and I took live during the London session with the private mentorship group. This was quite of a tricky one because we had some mixed opinions on this one. Some were going long while I was going short. And I have to say this was a very tricky example to trade in, because if we go to the 4-hour, we could argue that we swapped sell side liquidity right here. We had a lot of momentum going up and basically we could continue this trade. Also this day euro was looking much stronger than pound, so I would understand why people were looking for longs here. But I started my strategy how I always started in this market structure. So basically 4-hour wise, even daily wise, we are on such a downtrend right here. This is also the sell side liquidity that we took on the daily. Again, causing confusion that made people look for buys. Anyway, we were in such a downtrend, and even though if we are taking out sell side liquidity or not like this, and we are not seeing a clear reaction, I will stick with my market structure. In euro dollar, it was different because we had not much momentum to the downside, and this was basically a clear as day pullback, right? That is why I capitalized on this as soon as the sell side liquidity was swept. But on euro GBP, as you can see on the daily, we swept this sell side liquidity, but we were going so short for days and days and weeks and weeks and weeks basically, that I'm just keeping with the narrative, and that is short for now. So on the 4-hour, as you can see again, lower, 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 lower. We're on a huge decline. So basically that's still what I followed. On the 1-hour, this is very, very nice what happens right here. Let me delete this flip. So as you can see, we came down and we came up very aggressively, but then we started to consolidate right up here. So this indicated to me that we are not going to break this previous high right here. So there's an order block right here, fair value gap right here. But let's say we just mark out the order block. As you can see, it traded in there perfectly. So we traded into the order block. We took out buy side liquidity right here. And then we went straight down after that. Do you see this 1-hour candle that is so aggressively going down right here? Bam. Then I zoomed into the 15 minutes, and on this one I didn't even zoom in on the 5 minutes because the 15 minute gave me enough of confirmation that I can take the trade from here. So there was one fair value gap up here and there was one fair value gap down here. I just basically took it in the middle of this big fair value gap. I thought it was a bit too large to take it from the bottom of the fair value gap right here, so I wanted to see it come higher. Plus this is also the 61.8 area of this move downwards, so I thought that was a perfect opportunity for me to sell from there. Then stops above the previous high because this one swept the buy side already, and so it was a perfect place to put our stop loss. And then again, what I told you in the last example on EU, if we are respecting this high, the next one that we are going to take out will be this low. And as you can see, to the pip it hit today, but now we're most probably up for a bit of a reversal and then go down from there. So guys, these were 2 examples. So what do you need for this strategy? Basically only 4 simple things. First of all, we are going to determine our market structure. Are we going bullish? Are we going bearish? I want you to do that on the daily, the 4-hour and the 1-hour. You are going to mark out your highs and lows. Are we printing higher highs, higher lows, or are we printing lower highs and lower lows? This will determine if you're bullish or bearish, and this will be very important for the next steps. So then you will be writing down daily bearish, 4-hour bullish, 1-hour bullish, for example, right? This will tell you exactly what you need to know and where you are in the market. Are you still in your pullback? Are you trading with the trend? And you will exactly know what to look for and what your daily bias is. Then, secondly, I want you to mark out point of interest areas in the market on the 4 hour and the 1 hour. So basically these are order blocks and imbalances in the market, so fair value gaps. This will be the only places where you look for a trade. And I only want you to take trades that are also in line with your 4 hour and your 1 hour bias. Then you want to wait for displacement coming out of that point of interest area in the market. So first of all, you're waiting for price to trade into that point of interest area in the market, and then you want to see displacement coming out of there. Displacement looks exactly like this. On the 1 hour, this candle right here is massive displacement. If you zoom in on the 15 minutes, you can see 3 big candles. They all leave a fair value gap, and that is perfect for step 4. You are going to enter on this fair value gap or an order block that is created in this leg down. I would prefer that you only take it above the 50% of this leg down, and your stops should be above the swing high. Or of course, if you're taking a long trade, underneath the swing low. Then I want you to target, if we are in a downtrend, basically the next significant low on the 1 hour or the 4 hour. And if you are on an uptrend, basically the next significant high on the 1 hour or the 4 hour. Let's say you are counter trend trading. I would not advise to do that, by the way. But if you're marking up your charts and you have a big point of interest area in the market on the 4 hour and that is way up there, and you know that we are going to trade up to there. For example, we are in a downtrend, you want to take a short position from the POI, but you have so much long opportunities in the way up there. Please only target a maximum of 1 over 2 trades, because you never know when the market is going to turn against you. The market doesn't have to trade up to these point of interest areas, because in the end, these are still lines that we draw on the charts. And that is it, guys. That is basically the strategy. It is so easy, and it is basically just trading the pullback, but it is a bit more refined by the use of order blocks, by the use of displacement, and by the use of fair value gaps. This will give you the best entry possible. And this has basically been my bread and butter trade for the last 2 years. I'm still in the process of refining it and trying to better it even more, but this is how it looks right now. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe to the channel if you're new, and I will see you in the next one. Bye bye, guys.